Hello traders, welcome to the video. In this video I'll be showing you a very quick price action strategy. So this strategy I'm about to show you, you do not require any indicator to trade it. You just need to follow the rules that I'll be giving in this video, and then you are on your way to profit. It is very easy. It works on all the markets. I will show you example in the boom and crash, and also I will show you example in the volatility index market. So you can use it to buy. You can also use it to sell markets to the downside. The basic of what we will be doing in this strategy is a fake out breaking strategy. So let's say market has been creating two zones like this. So we mark out this high and this. So once market breaks out and then break in, that is trapping people that buy to the upside and also trapping people that sell to the downside. What I mean is that there are some people who have their buy limit here, so they have their stop loss above this swing you have over here. Don't worry, I will show you example on chart. So market will take them out and then break in. And then for those who are buying to the upside, those that have their buy here, stop loss below here, markets will tap them and also hit their stop loss. But we are using these two traders to our advantage. So what are we looking for? We want to see market breakout. So once it break out, we wait for when it breaks in. So immediately breaks in, we look for our sell and target the recent swing. So that is basically what I am trying to explain in this video. Don't worry, you don't need to understand right away. I will explain using the chart so that you can understand better. So what you are going to do is to look for a particular swing where markets have formed at least two touches. You can see over here, market use this as a swing, this as a swing, and then retest at this level. So this two is a good example. So we have one here, another one here, but let's draw that out first. So I will take my rectangle tool and draw out this level, touching this level and this level. You can also draw out this one if you want. This is just one, did not retest any zone here. We have this zone and we have this zone, so we can also draw that out if you want over here. So that is basically two examples. The reason why I don't use line is that this is not a level, it is a zone. So that is why I am using rectangle to draw out that zone. So once we have this, retest one, then another retest here, then we wait for the third retest. So we go to our 1 hour time frame. So at the third level, what are we looking for? We want to see market retest this level. It can break it like this, or it can just form as it forms over here. And we want to have a close above. So you can see over here we have a close, then we enter your buy immediately, then you target this high or this other high. Then your stop loss will be below this candle that enters into that zone. So this is another example over here. We have market touches this level, then touches this level, then we have the touch at the third point. So we go to our 1 hour time frame, we go to that level, we see market touches it, but we are looking for a strong close to the downside. So here we have a close, we enter our sell, stop loss can be above this high. You can take it a little bit higher because markets can come and tip the top before it drops. Then you will target these lows to the downside. You see how market meet all the conditions. So here, if we go back to our 4 hour time frame, we can also see that this level extend up to this point. So this is telling us that we can cash a buy here and also cash another buy here. So if you go to our 1 hour time frame, market touches it and have a strong close to the upside. So you want the candle that closes above or below to be a long one. So you see this closes above, a strong bullish action over here. And we have a stop loss below this low. Market comes, tests this candle, comes to the upside. You target this high, or this high. Then you can also target the overall high at this point. But most times markets might not reach this level. It can only reach the intermediate swings. You see how market enters our TP. So over here, you can see if we draw this out, we see that market breaks to the downside and did not come to the upside. So here we have no trade. So let me go to the 4 hour time frame and also show you one more example. So this is another one over here. touches this level, and then this is the third touch. So if I go to my 1 hour time frame, so over here we have candle closes above. So this is condition whereby it can spike to the upside, taking out those who want to sell that have their stop loss around this point. Enters into the level again with a 3 bearish candle. So this is confirming to us the market is likely to sell to the downside. Have your sell here, stop loss above this high, and then we target this low. So we see how market comes, we test a particular level here, and then it's our TP. The reason why we target this low is because there is no intermediate swing over here, because this will be our entry and we cannot take our TP here again. So we target this low around this point. So let me go to the volatility market and also show you that it works over there. Let's use volatility 25. First, we go to our 4 hour time frame. So if I zoom in to this point, this is the recent market. We have market reject from this point, reject from this point. So we can draw out that level for our next point of interest. So we go to our 1 hour time frame. This is the first touch. This is the second touch. So at the third touch over here, we have a strong close to the upside. We can have our buy immediately. We target this high or this high, but we see the market comes and sweep that low again. So we are likely to get break even at this point because we are targeting that other high to the left, this high. So here market comes again, then give you a strong bullish candle to the upside. So you enter a buy, stop loss below this low, target this high or the other high to the upside. We see the market gives us this high, then reject at this point, then break to the downside. So we can take our TP at this point. So back to the 4 hour time frame. Here is also another sell condition. So if you look over here, market reject at this level, reject at this level. So we know that the next level can be a very good point of selling. So we go to our 1 hour time frame. So over here we have a strong close to the downside. We enter our sell, stop loss above this high, and we target this low, or this overall. You see that immediately we hit this, market continues to go to the upside, then break that level. Best traders in the world don't actually have very complicated setups. They only use simple support and resistance. Not all of them, but most of them uses normal support and resistance. So if you take your time with this strategy and then you spend more time on charts, then you go on your demo account to test this strategy, you will be mind blown how your win rate will increase. So one thing I want you to know is that everything works, support and resistance works, indicators work, SMC works, but you need to take time and practice on the charts. You need to spend more time with the charts. If you find this video helpful, don't forget to like this video, subscribe to this YouTube channel, and turn on notification bell so that you get notified anytime I release a new video. You can also check out my other videos that are displaying right now on your screen. Thanks for watching.